Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Wednesday, June the 7th, 2023. And finally, in the S&P and in the NASDAQ, we saw a little bit of a downdraft today, as I had been calling for and looking for over the last couple of days, is for a small wave 4 to unfold. And in the NASDAQ and in the S&P, it really began yesterday, and I was looking for the continuation to the downside, which we didn't initially see. In fact, both markets kind of cruised up towards their highs that we got from wave 3, and then decided that they were going to decline. So it became a very interesting day, because at one point I was like, oh boy, the third waves are going to extend yet again. And was the S&P going to go up to next level at 413.13, or even attempt to touch the top of the triangle boundary, which would have been like 43.20? But it didn't. It came down, and while it got up to that high, it sort of produced what we're going to be looking at as a flat. So in other words, the A and the B and the C were all equal. In fact, we need to leave open the potential that we might continue to see a little bit of follow-through downside. And very possibly, this is just wave 1 or wave 2 of the C wave down. And then we get a 3, 4, and a 5, and bringing us much lower. Well, I say much lower. We won't, I don't know exactly. I wouldn't think it's going to be super low. But let's just take a peek at normal retracements for a wave 4, and that level is 0.382, Fibonacci 382 retracement, and that brings us to 42.30. So today we got as low as 42.6925. So we continue to have support on this at 42.60 and a half, 42.54 or 55, down to about 42.43, and then we have 42.32. So we do have support. We've got a nice cluster of support still within the market that would hold it higher and then allow for that fifth wave to come in. So what we have going on could be just in a little bit of a 4 finishing up, and then the continuing rally. So what did begin to bring it down today? We saw actually the Dow higher, and that was based on, I think, a lot of like the banks. We had Citicorp, Goldman Sachs, or the too big to fail banks, I call them. Citicorp, Goldman Sachs, JP Morgan, Morgan Stanley, they all really had a firm bid today, with Goldman being the winner on terms of holding that firm bid for the entire session. Also, within that, we saw Honeywell and do pretty well. We saw some of the other Dow stocks also just catch also that updraft. And when I took a look at the Dow, there's a strong possibility that that's not over, and they also may do a little bit of a pullback and still have another run up. And that also then goes for the Russell, which again today caught serious fire underneath it and launched itself higher. It was a very impressive day in the Russell, as again, capital inflows into that market. So mid-cap caught fire again today. Now, whether we're seeing this another additional rotation starting, where maybe some of the money that went into artificial intelligence, into that whole rally phase that we saw that just continued, we start to see some of that pull back a little bit. In fact, like NVIDIA, initially trying to rally along with the balance of the market, getting itself back above 400, but ends up down on the day nearly 12 points. We saw Microsoft get socked in the jaw, down $10 today. We saw Meta, which is part of that artificial intelligence with their vision stuff, that it was down $7.50. So we can go on. Google, part of they have artificial intelligence on their web browser. And then, of course, we have Amazon, which has some artificial intelligence in the web services. We have AMD catching that draft because their chip, like NVIDIA's, is very popular and is in cahoots with Microsoft. So AMD took it on the chin. And then finally, Apple jumping into the realm, saying, we also are in this artificial intelligence, maybe a day late and a dollar short, you might say, but they started to catch a little bit downdraft. And this was after the stock intended to open higher, push itself back above 180, only to be knocked right back down again. So as this continues to just flow in and out, then we're getting to see the participation, and that basically within the NASDAQ and the S&P really just set the stage for the continuation of this wave 4 correction that I'm counting. So back here in the S&P, I do think we can consider it close if they kind of come in and they just start buying it right from here. But initially, I think there's two ways I'm going to look at this. Either this is A and B, and this is 1 of C, 2 of C, and we're going to get a 3, 4, and a 5, and we will end up down in here. So we get another little stronger downwind. We do have, again, support at 4260, 4255. Then we have the 200 EMA, that's the hourly 200, at 4243. Then we have the SMA, the 200 SMA, at 4239. And then right below it, we have that 3A2, that fib support at 4232.50. And then right below that, we have the bottom side of the triangle boundaries, the trend lines for the triangle. So it may look like, okay, the world's falling apart, but it likely isn't. We're just going to look for that completion. Now, where it might seem like the world is falling apart is over in the NASDAQ. Let's go take a look at that, because remember, I laid out this same story. Now we're going to revisit it again and see what could become reality and still have a form of strong rally to come. Okay, so again, we're just tracking fourth waves. In the S&P, it's a minute 4. Just to kind of read, just quick, I'm not trying to repeat myself, but just quick. Don't forget, we still got that C wave, and what was in there is the minor degrees. So we have minor 1, 2, 3, and 4, and we're still looking for this upside swing. One thing that I will add, once we do have the fourth wave complete, I will add that last ticket, which is minor 5 compared to minor 1. And those fibs will bring in once we have that low for minute wave 4. But other than that, we have all of the additionals in for the minor wave 5. And those continue to show up at various places. So over in the NASDAQ held up pretty well today. Then all of a sudden, they just gave it up. So you can see initially right out of the gate, that's this morning, we ran all the way up to 14,668. That high was 14,695, we'll call it. So it almost got there. So for all intents and purposes, we could have said it could have been an ABC flat, which would tend to be looking for that support to come in around 14,508. But actually, what I was looking at, and let me just open that up so we can pull it down and we can see all these numbers. So what I was looking for here, right, we get the A, the B, and the C, was that maybe wave C would be equal to wave A, and that put us down at 14,484.85. Well, it came down, hit it, bounced back up, and then just gave it up. And then it gave up the next level, the next level, and the next level, all of it. So it gave up it gave up equality, 1.618, where wave C would be 1.618 times the length of wave A. That was given up, and then all the way down to almost 200%. So what is this really beginning to look like? Oh, I still have it as a minor 4, but what I'm going to do now, I'm going to bring it back up here, and I want to just open this up So again, to bring in, where are our other numbers? There they are. I mean, believe it or not, because I have to keep switching screens because of the length, the strength that we saw within this minor third wave, which began at 12,628, completed at 14,600, actually 694, I believe I just said. So that's quite a distance. So here are those fibs, and here's where they sit. Okay, so when I go back down to the hourly chart, they're the ones way over here. That's where they're showing up, but that's the 382. Here we have 382. So minor wave 4 would be 0.382, the distance of minor wave 3 at 13,903. Well, we dropped 270 points today. And that was just like bouncing slightly higher off of those lows. We were down a little bit more than that. What if, I know, here we go again with the what ifs. What if we're just doing a 1, a 2, or we already have 1, 2, and now we're still continuing to drop 1 of C, 2 of C, 3 of C, 4 of C, 5 of C? What if it's just maybe a straight shot down, where all the fluff that we saw in AI and that tremendous rallies that we saw in artificial intelligence, pushing the market incredibly. And trust me, this is just going back to May the 25th. We're only on June the 7th. So 2 weeks, folks. Tomorrow, 2 weeks. This has all been going on. So it's been quite the rally, and now we are getting a solid pullback. And while I continue to feel like, wow, this is just not deep enough, it's not deep enough. Well, now we're getting there. But actually, that first line in the sand for a fourth wave is at 14,205. So we got another 100 points that it could drop and still fall within the realm of reality for a fourth wave, basically almost just the minimum, and still fit within our count. Now, same thing here in the NASDAQ as I'd said in the S&P. Once I do get the fourth wave in, then I can go back out, and I know I got to keep switching screens because of the size of these waves, and then I'll be looking to put in minor wave 5 as compared to minor wave 1, and that's where we'll get those upper levels. So, but for right now, though, right now, I don't have them. So when people ask, well, what's resistance? I have to go on what I have available. Whereas, again, going back out to the 4-hour chart, so we can see this is actually coming off here. Here's the 382. These on this outside are for the intermediate wave, the primary wave B. So primary wave B, and that's where we already hit, primary wave B would have been 618 times the length of primary wave A, and that was at 14,660, I'm going to call it. And we got above that. So that's the 618 number. What we have above in terms of what primary wave B can do, that comes in at 15,207. Now, I can add here, and I will, so that we get one more layer, but I don't want it to become so confusing that we just have all these lines and numbers. So we'd be looking at where wave C can come in. So now here we have minor wave 5, here we have intermediate wave C, and here we have primary wave B. So that's how this layers up in Fibonacci. Then I'm always looking for where we get our crossovers, where we get our clusters. So I will be adding one last one. Once we get this correction is over, I will be adding our last ones and taking these off and adding for the minor 5. So those will likely be right close by. They're not going to be all the way over here. But you can start to see we have clusters. Now let's just move up where we had continued to have clusters. So once we start breaking above 14,700, we start to get a lot of air in between until we can put in the minor wave 5 levels. So automatically, just if we don't have those levels, and I would say, well, where resistance could come in, yes, we're going to have some in between, but at Fibonacci basis, we don't start picking them up until out here, 15,000 and above. And then we start running into like 1.618. So they really can go should that occur. Now, you might want to say after today, no way. You'll realize after a while that I no longer use never. Never can do that. Won't happen. Those are not a part of my vocabulary anymore when it comes to the markets. So I'm presenting the technical picture, and that's what levels are discussed here. Now, I am not by any means also discussing that's where it's going to go, but I need to lay it out in a fashion where we've got this and we're expecting another rally, and what are the possibilities and the potential for that rally. Against what we were witnessing today, they would seem pretty low. You know, again, today, we saw finally the Treasury markets start to really get hit again. Maybe that was because somebody's starting to realize that, well, we are getting inflationary numbers. We are beginning to maybe piece together that the Fed was specifically telling you the truth. As much as we'd like to pause, as much as we feel that, yes, we'd like to give a break to all this because we realize the changes that are happening within the economy and what is truly being affected by higher interest rates. And so just to give a little bit of a win there to get something else going on. So, but it may not happen. And I think part of that started to filter through the market again today. And we saw the bond market totally turn, particularly in the 30-year bond, and reverse back lower again. So it was quite a large move in the 30-year bond. It's only showing down 4 ticks here, but it was actually over a point. It was almost a 1.5 that the 30-year bond was down on the day. So a lot of things happening within the market, not only within the equities, right? Another rotation. We saw that happen. The Russell still on fire. Russell still, in my opinion, has an additional. They need a pullback here, but again, it's going to be a 4th wave. Likely on a minor degree, at least. A minor degree within the IWM and also within the RTY and within the future. We get a 4th wave, we still have a 5th wave. So there's still another piece of the rotation that I think needs to come in to the Russell. I do think that within the S&P and the NASDAQ, we still are needing the completion for our 4th waves. So we got to leave that room for the downside that may continue tomorrow. And then we'll get that additional rally phase. Don't forget, we have until next Wednesday before we will hear from the Fed as to what their decision for the month of June, and right now, what their decision will be. Will it be a pause? Me personally, I'm definitely not looking for that they're going to start easing rates. They may pause and not raise. So rates would stay at that 5% number. But my gut is telling me, because we heard from the chairman of the Fed, and we heard from several of the governors. We heard both sides of that story. Yes, they would like to pause. They would like to give a lot of the sectors, a lot of things, a little bit of a break here. But the reality is it's probably not going to happen. Why? Because employment remains very stubbornly well. I mean, let's just figure. People are finding jobs, and that's a good thing. But it's inflationary. And if we don't control it before it gets started, it gets out of control all over again. So enough of that. So again, for tomorrow, I think that we will get some follow through. I'm looking for our 4th waves to complete, and then again for the market to turn and begin to move higher again within in the S&P a minute fifth wave, and here in the NASDAQ and a minor fifth wave. That's going to be it for today. Our next update will be on Thursday, June the 8th.